If you have looked at your portfolio recently, you most likely know just how bad the stock market has performed. The prices all across the board are basically down, and that includes every single index more or less. However, it also includes high quality blue chip stocks, and that is really exciting news for us investors because it gives a lot of buying opportunities in the market right now. And in today's video, I'm gonna give you 3 examples of high quality dividend kings that right now are trading at great value. But anyways, before we get into all of that, then my name is Casper, and here we strictly talk about investing and financial freedom. So if you really like investing and you want to retire early, well then press that subscribe button below. But without wasting any more of your time, then let's jump straight into it. So the first stock on my list that has seen a big drop during this year is Johnson & Johnson. And they are down by 12.3% this year alone. And they are right now sitting pretty close to their 52-week low. They have an earnings per share of 10 and a forward price to earnings ratio of 15. And that is basically indicating that for such a high quality company, then right now might not be the worst time to buy. I do also have Johnson & Johnson in my portfolio, as you also could see in my last monthly portfolio update. And it is one of the stocks that I'm actually down on by roughly 9% or $100. So right now might be the perfect time for me to buy and get that average share price down. But let's have a look at their dividend stats, because that is honestly what makes Johnson & Johnson such a good investment. We see that they have a dividend yield of 3.05%, and that is absolutely great. And they also have a payout ratio of 44%, and that is also good because it means that they can easily sustain the current dividend, and they also have room to increase the dividend in the future. They have a 5-year growth rate of nearly 6%, and that is also pretty good for such an old company that has basically been around forever. But the most important thing is that they have consistently been able to increase their dividends for the last 60 years in a row, and that is truly impressive, and it does make them an official dividend king. And they will most likely continue increasing their dividends for the years to come. But moving on to the second stock on my list, and here we have Coca-Cola. And they are basically down by 14.68% year to date. And they are also sitting pretty close to the 52-week low. And they do have an earnings per share of 2.64 and a price to earnings ratio of 20. And that is pretty good for a high quality company like Coca-Cola. You basically don't ever see them trading at a discount. So this is basically just as good as it gets. I also have Coca-Cola in my portfolio, and it is one of the stocks where I've actually made money. And I have earned roughly 11% or $68 since I bought Coca-Cola. So I obviously don't have a lot of stocks in Coca-Cola, but I definitely plan on adding more, and right now might be the perfect time to do so. But let's have a look at their dividends as well. They have a dividend yield of 3.43%, and that is again pretty solid. They also have a payout ratio of 69%. They also have a 5-year growth rate of 3.4%, and that is also pretty good. There is basically nothing here that is completely amazing or outstanding. However, they have consistently been able to increase their dividends for the last 60 years in a row, and that is what makes Coca-Cola such a great company to invest in when it comes to earning that passive income. Coca-Cola is basically a slow and steady grinder. However, it is a very consistent one, and this company will just keep on making you money like it has done for the last 60 years. It has always been a great investment, and it would most likely continue to be so. So moving on to the last stock on my list, and this is one that I don't actually own yet. However, I do really plan on buying this stock, and that is Procter & Gamble. And they are down by 5.65% year to date, and they are right now trading at an earnings per share of 6.39 and a forward price to earnings of 22. And that is not bad for a high quality company like Procter & Gamble. This company basically serves as the foundation for very many dividend investors' portfolio, and that is because it is such a high quality dividend company. However, as I mentioned before, then I don't have the stock yet, but I do really plan on buying it at the end of the month. But let's move on to their dividends. They have a dividend yield of 2.63 and a payout ratio of 62% and a 5-year growth rate of 5.68%. Overall, then all of these numbers pretty average for P&G. But what really makes this company amazing when it comes to their dividends is, just like with the other two, their ability to continue to increase that dividend year after year. and they have consistently been increasing their dividends for the last 66 years in a row, and that is absolutely amazing. P&G is a very slow growing stock, and it is slow growing both in terms of their dividends but also the return on the stock. However, right now in times of high uncertainty, then that is exactly what you want in your portfolio. You want something to rely on and something to fall back on when times are tough, and P&G is the perfect choice for just that. And that is exactly why I plan on buying more P&G. And that was basically all I had in today's video. Please let me know in the comment section below what blue chip stocks that you're gonna buy at the end of the month. I hope that you liked today's video. If you did, then don't forget to smash the like button below and subscribe to my channel for more weekly content just like this. See you guys in the next one.